Hello, hello. How are you, everyone? Welcome back to the Decentralized Masters podcast, your go to source for everything decentralized finance. I'm Tristan, and today I'm going to guide you through the ever changing world of DeFi, um, one strategy at a time. Usually, I co host with John, but he is actually currently at ETH Denver, so he may drop in a few minutes or so, but we will have to see. For now, though, I wanted to just go over some general market activity. It has been, well, to say the least, very busy in the last few days. Market drawdowns have been quite severe, and I just wanted to kind of go over my general opinion over that. I also have a bit of a presentation for you guys, like I always do, just about some general strategies that you can use to protect your portfolio during this type of market environment. But to just start off for today, I wanted to go over the crypto bubbles like we often do. All right. All right. Another so kind of day on the market. Not oh, sorry, we're looking at the month. The day to day, not bad. This is much more of what I was seeing this morning. We're getting a little bit of pullback we're getting a bit of a raise in prices. Just currently, it was pretty rough yesterday and day before. So things are kind of recovering today, which is very nice. We did see that large drop in Bitcoin. So if you go on to the week, cryptos, altcoins, and even Bitcoin now have all started trending downwards. They are well, a lot of the altcoins are probably at 52-week lows. Bitcoin was an outlier here, so Bitcoin was lasting or staying above that 90,000 kind of range, staying above the rest of the cryptos, had a little bit more dominance, but now it has joined the rest of the crowd and has come down as well. You can see that the Pi token, so if anyone was a long-term holder of Pi, they are not doing too bad at the moment. That coin just recently went kind of public. It was on their private. It was sorry, it didn't. It wasn't exposed to the other markets, so you couldn't swap into it. You couldn't really buy it. It was just on their own network up until recently. So this kind of explains the drastic price increase that you're seeing there. On the Pi project itself, I was years and years ago. I was involved in it. I was, tap mining. Whether the legitimacy of it today is, a little bit questionable. But yeah, if you were a Pi token holder, you are being rewarded currently. Um, so at the moment, things in this month have been February has not been a great month for crypto. There are some outliers, so it's been very token specific. So, for example, Mantra is still doing very well. MakerDAO has been pretty successful, and the Sonic token. These have been. It's a very indeed token specific market, kind of like what you'd see in traditional finance. You'll see certain narratives in bull markets rather than in the whole markets. And by that I mean like you don't see a theoretical altcoin season in traditional markets. Like when you're in stocks, you don't see all stocks rise. You see kind of just more sector based success. So this month or this quarter has been really good for the mining sector. So if copper miners are doing very well, or oil stocks have been doing very well. I think in since we have like a million plus different tokens now in the crypto ecosystem, um, we start seeing a little bit more specific gains. So coins that work in the real world asset space have been a little bit more successful than meme coins at the moment. So you're not going to see all this general uptrend with everything in the space. It's going to be a little bit more narrative specific going forward. That is just kind of what I'm thinking at the moment. Another thing that I wanted to show you guys that was quite interesting is the fear and greed index, because it has been setting records. There you go. You guys can see that. We are getting near, or very near, look at that, 20, to extreme fear. This has been some of the lowest it has been ever since coin market cap has been recording data on fear and greed. This is actually the lowest it's ever been. So whether this is an opportunity, yeah, it could be. We are seeing a bit of a bounce back. I'll get into a little bit of technical analysis as we get into the presentation, but general sentiment in crypto, like on crypto Twitter right now, it's garbage. People are unhappy. People are saying this could potentially be the beginning of the bear market. I'm not quite there yet. I know John and I in the last few podcasts were saying, watch out for this 89,000 level. If we break below the 89,000 level, it could be a long drop below. And it still could be. It's realistically, yeah, it totally could be. But I'm actually a little bit more optimistic now than I was 2 weeks ago, which is, I guess, funny when you consider the price price of Bitcoin 2 weeks ago versus now. Which is a good segue for me to jump into my slides. So, before I jump into slides, I think we got some questions here. Thank you very much. Thanks, Tony. The minister says, what app should I have to follow the market? Apps specifically, I think CoinMarketCap is good. That's a good one. So go look at CoinMarketCap, the one I was just looking at now. This one, CoinGecko is another good place to look. I am quite the fan of CoinGecko, so if you want to look at that, feel free to look at those. Looks like
Hey,
we
Tristan.
have John on the call.
Yeah, I was in the call earlier when you started, but it said I needed host access, so I guess I wasn't signed into my account. So I apologize for
Oh,
that.
all good, all good. I kind of just went over fear and greed so far. What I also looked at the kind of just general sentiment at the moment. Talked about kind of people are a little bit anxious at the moment, but I'm not too worried. That's kind of what we've done so far.
Are you still there with me? Okay, there
Yep,
you
still there.
go. Okay.
Yep.
No, yeah, 100%, man. I totally agree with you. I mean, I looked at the market a little bit today this morning. It doesn't seem like it has calmed down a lot, which is good. We're still like at the $80,000 range. So tomorrow is Friday, so big day in crypto. Usually Fridays detect what's going to go on with the market. Any kind of news that you've seen with the stock market as of today overall?
So the Nvidia earnings came out after market yesterday. Everybody was watching that, and they turned out to be not bad. So the market has kind of just kept going, trending sideways, a little bit up. So it's not a huge day on the market. It's pretty quiet.
Yeah, that's pretty good. I don't expect much going on these next coming days. I think right now a lot of people are in somewhat of a panic. But I definitely agree with you. What you mentioned earlier, there's nothing to freak out as of yet. Like we're not there yet, right? It's like, and I think that's where like we've might have seen that overreaction to the market. But because of liquidations and greed, that's what causes these kind of market volatilities, either to the upside or to the downside. But overall, I think we are still in a good position, in my opinion. Now, we did talk about this with our free community, with our private community yesterday, about on Let's Talk Crypto, about the best option in our opinions would be sticking to like stablecoin liquidity pools if you are going to do anything.
Yeah, I definitely echo that sentiment. I have a significant portion of my portfolio in stablecoins at the moment, earning yield. So just in case the market does start coming down some more, I am ready to jump on some opportunities.
Yeah, there's a lot of good opportunities right now, especially the ones that you shared yesterday with everyone. I think
Hmm.
those are some really good ones. I definitely want to go ahead and check out myself and keep an eye on.
Awesome, awesome. So, for everyone watching, you are in luck. We are going to go through some of those opportunities today on my slides. If there's nothing else we want to talk about first, I'm going to just jump into the slides then.
Yeah, go straight into it, man. I'm on my tablet right now, so I'm going to be very limited to what I could do and share. But either way, there's not much on my end to really cover in the market. So all you, I'm just going to sit back and
S-
listen.
Sounds good. Alrighty. So, is this the end of the bull market? Everyone has been asking this question lately. Crypto Twitter has been downright bearish, to say the least. But personally, no, I'm not. I'm not overly worried, and you'll see why as I go through my presentation here. The big three did make some lower lows, 52-week lows recently. Solana, we broke down just below like 130 for a little bit there. Not great. Ethereum, we were looking for that kind of recovery rally there. If you were watching John and I in the last few podcasts, we're saying that Ethereum had this potential setup. And if it does break out of this downward trend, it would um, kind of maybe kick off that alt season that we were all looking for. That didn't happen. Instead, it looked, you know what, for a moment, it did look like it. And it was looking encouraging. But then it did break down below. Probably it could have been a little bit, we had a lot of tariff news come from Donald Trump. Apparently, there are some tariffs that are going to go into place again March 4th, I believe, March 4th or 3rd on Canada and Mexico again. He also said that there are some tariffs going on the EU coming soon, as well as China. So all these tariff news are kind of just pushing the market downwards, and that's for the stock market and crypto. Since the Nasdaq especially is very highly correlated with crypto, the whole kind of general sentiment out there is bringing us down. Even Bitcoin, which was, it was doing pretty good. Bitcoin was kind of kicking the bear market. Well, not sorry, it was kicking this downtrend a little bit. It had a lot more buying demand than Ethereum and Solana. Um, but unfortunately, now Bitcoin has joined the rest of the crypto market. It is no longer that special. Yeah. So why is this happening? Like I just said, Trump is putting tariffs left and right. 25% tariffs are supposed to go into the EU. That's coming soon. We also see inflation as being very sticky. So if you've been to the grocery store lately, that you may have noticed that the price of your eggs are still very expensive. They haven't come down at all yet. Fingers crossed that we can, tame this inflation. But if it does stick around, then the Federal Reserve will either not cut rates, which cutting rates would be good for the crypto market, it would be good for the stock market. Unfortunately, if inflation continues to rise or doesn't fall, the Fed might actually be forced to raise rates, and we can definitely see some downward momentum if the Federal Reserve comes out more hawkish than expected. We also have large outflows of liquidity from the Bitcoin ETFs at the moment. So if you see this chart down at the bottom right of this slide, recently there has been negative demand for Bitcoin at the moment on the ETFs. We had a great December. We had a great December and January for the Bitcoin ETFs. There was lots of demand. People were coming in. But since February now, things have been downright boring. People are no longer putting a lot of funds into the Bitcoin ETFs. And classic economics, less demand, more supply, therefore the price goes down. So hopefully we'll be watching the inflows of the Bitcoin ETFs, because that will be a key indicator to see how Bitcoin will be performing going forward. So that is something that we always are watching and telling our private communities to keep their eyes on. Also, I wanted to pivot now to why I'm not actually fully bearish. Like, I'm not in the opinion that we are going into the full bear market, or not just yet, at least. This chart that you're seeing here, this is the Bitcoin price to global liquidity. So global liquidity being the amount of money that is in the system. So, for example, when the United States it prints money, or when China prints money, that is adding to the amount of income. Sorry, that is adding to the amount of money that is just swirling around in the economy. And the Bitcoin price actually follows that very well. Bitcoin and crypto in general is a big suck, like a big sponge for all that excess liquidity that's out there in the market. So as you see here, we've had a little bit of a divergence here in the kind of December range. The price of Bitcoin has stayed steady. So it has gone flat over the last few little while the amount of liquidity in the economy has actually gone down. So we would have actually expected the Bitcoin price to move lower quicker, but it did not. That just means that means there was lots of buying demand, probably from institutions and the ETFs during December, because that was leading up to or that was just post inauguration there, barely. So there's lots of demand for crypto in that period of time. So that could be why we didn't see such a downtrend where we may have supposed to seen it. However, that demand for crypto has been waning. So we might potentially see this blue line come down a bit as global liquidity came down. Which is probably what we're seeing now. But you see here the green line, global liquidity, has actually come up just in this bit of February now. In March. This is forward looking. So global liquidity is expected to rise. And then with rising global liquidity, you can kind of expect Bitcoin to do the same thing, just by judging on the history of this chart. However, stranger things have happened if it doesn't, but it would be a very educated guess to say that Bitcoin will follow the price, the global liquidity in the market. Also, just as we began in the before my presentation here, I mentioned NVIDIA earnings. The stock market had their eyes peeled on NVIDIA's earnings, potentially the most important earnings report that we have gotten so far in 2025. If NVIDIA's earnings weren't that good, we would have seen a large drop in the NASDAQ, and it would have been a bit of a bloodbath. However, NVIDIA did beat on earnings. The analysts had an estimate of about 74 cents per share, and NVIDIA beat on it at 81 cents per share. So good earnings. The market was. It wasn't. I wouldn't say. I would not say it was happy, but it was content. So we didn't fall off a cliff. So from there, I just wanted to from there I want to pivot to just in case this is the bear market, and we just don't know it. People don't ring a bell at the top of the market and say, "Okay, it's time for the bear market." It happens like this. So 2 3 months down, and you kind of look at the chart and you say, "Hey, we haven't been making any highs for the last few months. We might actually be in a bear market." No one knows you're in a bear market until it's pretty obvious. So, what I'm trying to get across to you guys is that bear market or not, you should be investing right now or trading right now like it is a bear market. So, I'm going to show you some strategies to utilize to protect your portfolio on the downside. Because I think Warren Buffett said this, but it's not about how much your portfolio goes up; it's about how much you keep when it goes down. Uh, so, and that note, we will begin with the first strategy. John and I mentioned this first strategy just briefly in the beginning here, and that would be stablecoin liquidity pools and lending protocols. So, for those who don't know, your stablecoins, they don't have to sit in your wallet doing nothing. And you don't have to use that 4% staking in Coinbase. When you have stablecoins, you can put them into liquidity pools, just like you would do with other tokens. And you can get a liquidity pool with, USDC and USDT. Therefore, one and one, those tokens should not be fluctuating in value. Therefore, that is a pretty stable source of yield. You can kind of target around 8 to 15% for stablecoin liquidity pools with safety. So that is a solid way to earn some sort of income in your portfolio, especially during these hard times. And you can move that income that you're getting from your liquidity pools into tokens that are good opportunities at the moment. And then I just wanted to touch briefly on lending as well. So for platforms like SparkFi, which is MakerDAO, or Aave, those also are another good source of yield at the moment for your stablecoins. Before we move to the next thing, I would just say think of stablecoins like the bond portion of a traditional portfolio. So the traditional portfolio was 60% stocks, 40% bonds. Think of and so for crypto, it would be, your equity, your stocks would be your volatile tokens. So, your Bitcoin, your Solana, your Ethereum, and then all your, blue chips and all your high risk kind of tokens. That would be one portion of your portfolio, the larger portion of your portfolio. But you should have a small portion of your portfolio dedicated to earning yield through your stable coins. I'll just leave it at that. Dollar cost averaging. I know most of you guys are familiar with this already, but that is basically adding a smaller amount of tokens on a weekly, monthly basis. So that could be buying $100 of Bitcoin every month or every week. This just gives you a more average price. So if you threw $100,000 at the top here, you bought $100,000 of Bitcoin at 109,000, you're not happy right now. But if you bought $10,000 at 109, and then 2 weeks later you bought another 10,000, but the price has now dropped to 92, and then you buy another 10,000, and your price is now 84. You're still down. If the market is going down, the market is going down. Can't do anything about that. But you're not as unhappy as you potentially would if you threw your entire portfolio in at 109. You could be, if you threw it at 109, and then it could be 2 to 3 years before the next bull market, and then you're green again. So it's a good idea to create an averaged out system, so you're always getting a lower average entry price, so you don't have to suffer multiple years if we do go into a bear market, and that was the top. And then you can also throw that income from your stablecoin liquidity pools into your dollar cost averaging strategy, just so your dollar cost averaging with money that earned through your stablecoin pool, not through your own work. It makes dollar cost averaging and buying at what could be scary times a lot easier when it's money that you didn't have to break your back to get. Another one is we're going to move to real world assets. I've spoken about these before, but just go over them briefly again. Ondo, many of you guys are familiar with Ondo, the token, but the actual project is what got them all this interest out there is that they were the first to tokenize treasury bonds. So U.S. Treasuries, they were the first people to get that yield, the safest yield in the entire investment world. If the U.S. doesn't pay its treasury bonds, it defaults on those. You have more problems in your crypto portfolio. Um, super safe, super conservative. You can get a clean 4.15%, I think. Last time I checked on these Ondo tokens, so USDY and OUSG. If you're a super conservative investor, check out these two products on Ondo. Another good, I guess you could say, alternative investment at the moment is tokenized precious metals. So gold, silver. One of the most popular versions of this is PAX G or PAX Gold. That is the one on the left here. And that is basically the price of gold tokenized to crypto. So a PAX G token is the exact price of gold at the moment. And gold has been acting as a flight of safety recently, as people are being a little more scared, a little bit more fearsome in the market at the moment. The rotation has been to gold, and gold has been an outperformer as of lately. So if you want to get a little bit of diversification, you want to have a little bit of something that zigs while the market zags, potentially adding some PAX G to your portfolio could be a good strategy. A little bit less popular option is silver. There isn't PAX G is a very, as you could say, popular product. People are using it. You can get PAX G on Uniswap. You can get PAX G at most centralized exchanges like Coinbase, Nexo, Kraken. However, this silver example I'm showing you here isn't as popular. You have to go directly to the site, but still an opportunity, still something to consider if you like silver. The token is called Kinesis Silver, and it is KAG. Silver has also been performing pretty decently as well recently, and it just gives you that precious metal exposure in your crypto portfolio. So when cryptos all kind of move together, Solana, Bitcoin, Ethereum all will move in certain directions at the same time, usually. But the price of silver it's not really affected by whatever the crypto market does. So the price of silver might actually rise while your cryptos are falling. So it's a little bit of a diversification in your portfolio potentially if you are interested. Another thing I just want to briefly touch on is currency diversification within your stable coins. So not only do you have the option to do US dollar stablecoin pools earning 8 to 15% yield, you also have the option to do other currencies. So there are stablecoin pools for the euro, for example. Popular one out there is Euro C. I've seen that one be around 9 to 12% yield before on Harvest Finance. Super popular one. Another thing that I have another thing that I found is what I'm showing you here on the slide is the Swiss franc. So of all the currencies in the world, most of them have not outperformed the US dollar. Most of them have been down against the dollar for the last 20 years or so. Swiss franc is one that has actually beat the US dollar. So if you were trying to get some exposure to a currency that is a little bit different, has less inflation than the US dollar, you can actually find a tokenized version of the Swiss franc. The ticker symbol would be VCHF. And there's a few options out there for that as well. I was actually even able to find a liquidity pool for it on Balancer. That yield may have changed from what it is now at the moment, though. But yeah, that's another option to get some diversification within your stablecoins. And then this last one here is just something that is something new that I was looking at, and that is tokenized private credit. This is a platform called KASU or KSU. Still need to do a little bit more research on this, but this would essentially be buying tokenized private loans for businesses. But I would like to do a little bit more research on that before I actually recommend it to everyone. But yeah, that is kind of what I was going for at the moment, giving people as many options as I can right now. If things are looking bearish, don't fret. There are options. You don't have to have, or you shouldn't have to have 100% of your portfolio in Bitcoin or Ethereum or Solana, and they're all tanking at the same time. There you can take this as an opportunity when you have a little bit of diversification in your portfolio.
Yeah, great presentation, Tristan. Definitely do agree with you. I think right now one of the biggest things we just need to focus on in the market is just being patient and waiting for the market to start creating those other opportunities. But as you just mentioned, there's a lot of opportunities in the stablecoin pools right now or any lending platforms. So I think even then you can still go ahead and take advantage of DeFi fully. And that's exactly what we teach you here at Decentralized Masters. So I really like what you went ahead and shared there with us. I think one of the biggest ones that could definitely go ahead and piqued a lot of people's interest is the gold. I mean, being able to purchase gold, basically like a cryptocurrency, and holding on to it on your ledger. You're able to hold it onto your ledger, right? It's running. I'm assuming that PAX-G is running on ERC20.
Yeah, this runs on the EVM chain.
Nice. So like now you could go ahead and hold on basically your gold in your ledger. You don't have to worry about, you know what I mean? You don't have to worry about buying physical gold or any of that. So I think that's a really nice thing about it. And I think that might go ahead and pique a lot of people's interest because I believe with Pax Gold too, you could actually redeem that gold for actual physical gold. At least that's what it says on their platform. I've never tried it myself, but I do know that Pax Gold is a pretty stable and regulated company. So, which is definitely a good thing when it comes to an asset class such as that, especially since it's being backed 1-to-1 to gold, right? So, overall, I definitely do agree with everything that you went ahead and touched on today. Really good information. As far as for the dollar cost average, I also wanted to go ahead and add the biggest thing with the dollar cost average strategy, guys. You are also minimizing your risk. So I know I've seen multiple people wanting to go ahead and get that FOMO of wanting to buy, 20, 30, 50, $100,000 of an asset class. And instead of doing that, the best way is always to go in and scale in slowly, do $1,000 per week, bi-weekly, and go in and scale into your position. Because during times like this in the market where you might be thinking that the dip is over, the dip continues to go lower, right? And if you're getting aggressively throwing, 10, 20, 40, 60 grand into a position, you're not going to have as much, buying power to go ahead and buy into these opportunities, right? So I always recommend go ahead and do dollar cost averaging strategically. And one of the biggest things is being patient. I think the misconception that a lot of us get when it comes to dollar cost averaging is that we sometimes want to get an exact price of an asset class. And the thing is that you're not always going to 100% nail the top or the bottom. So the best way you could go ahead and position yourself so you're not disappointed, because it's happened to me in the past before where I wanted to buy an asset class and I really wanted that asset class to retrace and go down an additional 30%. And guess what? It never happened. It actually went up higher, and it would have made me a lot more money, and I would have at least been exposed to the position if I would have just bought a little bit and then just waited it out and then continue to buy with the dollar cost average strategy. So the dollar cost average strategy is a lot more important than I believe most people realize. It is a pretty simple strategy, but it's not just as simple as just buying on every red. I think, as I mentioned, in my opinion, is doing it strategically. And doing it strategically is going with a mindset of it's okay if an asset class you buy today and it goes down further, but like 2 weeks from now, it starts to go back up. buying even at a higher price is not a bad thing. And I know it might sound bad, but the thing is, you got to keep in mind when you're a dollar cost averaging, basically what you're doing is that you're bringing down basically the middle of where you've been purchasing overall. So it brings it down. So if at one point you were buying at $5, then all of a sudden you start to buy at $3 and $2. Now your average that was at $5 is going to come down to, let's just say, 3.5. So now it's like you basically bought the asset class at 3.5 instead of $5, right? And that's the power of dollar cost average strategy. So I always would recommend, don't look at it too much as the dollar value that you're buying. I always like to look at what I like to go ahead and look at is not just the dollar value of me buying the asset at $10, but more of, am I taking a bigger risk or am I taking a lower risk? Because you might be buying an asset class at like $12 or $15, and you might think that's too expensive, or you might go ahead and wait for it to retrace. But in reality, you're actually taking on a lower risk, because if it does go up higher, your opportunity was buying at $10 and $15, but because you were with the mindset of the value number behind it, oh, $15, I could have, if I wait a few weeks, maybe I get it at $8. If you go in with that mindset, that's a mindset that is a high probability you're gonna lose, because you want to look at this as I mentioned, not so much of the number value behind it, but more as, am I taking a bigger risk or is my risk lower? Right now with Bitcoin, let's say for example you're buying Bitcoin. If you're buying Bitcoin right now and Bitcoin goes down even lower, now you're bringing down your dollar cost average. You're bringing down your DCA, right? But let's say for example, if Bitcoin goes back up to above $87,000, and you had the opportunity a few days ago to get it at $80,000. Yes, it's $7,000 more, but you're actually taking a lower risk if you buy Bitcoin now at 90, because basically what that means is that the bottom was $80,000. So you're actually taking on a lower risk, as opposed to you waiting for it, buying it, and then waiting for it, buying it now. And then if the market dumps even further, we don't know how low it could really go. It could go down to 70, it could go down to 60, it could go down to 50, it could go to 40. We don't know. So the biggest thing, in my opinion, is being patient to this. Hey, Jugas, good morning, man. So my biggest thing right here that I would highly recommend is, when you're buying these crypto assets, do not look at the dollar value behind it. Look at it as the risk to reward that you're taking. Yes, it might be a little bit higher, but you're taking a lower risk now. And ultimately, that's what we want to do in this space. We want to always go ahead and minimize our risk potential, whether it's to the downside or to the upside, depending on where the market's heading, right? And that's the same strategy that I personally do. I like that chart that you pulled. Tristan, can you pull it out one more time? I think it was a really good chart. Like for me personally, and I want to go ahead and kind of give you guys and put it into perspective when it comes to this. As soon as Tristan shares this, Juga says, "See you in East Denver soon." See you soon, man. See you soon. Yeah. By the way, guys, I am in Denver right now for a crypto event. So if you guys are around the area, definitely let's meet up. But we are going to go ahead and be connecting with a lot of other crypto companies to best provide you as much value as possible. So this chart right here, dollar cost averaging. So what I like about this chart right here is, I'm not sure if I could go ahead and highlight things. Let's see if I could. Maybe I can't. No, it looks like I won't be able to. So if you go ahead and put your cursor in the middle, Tristan, between where it says January 2023, I believe, right there. So usually what I like to personally go ahead and do, yeah, right there. So usually what I like to personally go ahead and do is that if I'm buying an asset class, let's say, for example, I'm going to be buying AVAX, right? Keep it very simple. AVAX is at $10, and I have, let's say, $4,000 that I wanted to go ahead and put into AVAX. The one thing we won't be doing is putting the full $4,000 right now. We don't do that. What we do is, what I would go ahead and do is I would go ahead and first initially start off with $500. $500 I put in, wait a few days, let the market do its thing. If AVAX is slightly starting to go up, so if you go ahead and point a little bit to the upside right there, Tristan, where the red line and the yellow line are crossing a little bit in between where it says January 2023 in the left, right there. Right there, yeah. Do you see how that line's crossing the a little bit to the right hand side a little bit? Right there, yeah, right there. So let's say AVAX is at $5, or did I say $10? I forgot already. Let's just say it's $5.
$5.
But $5. Say AVAX is at $5, right? I throw in $500 into it. Keep in mind, I have a purchasing power of $4,000 just for AVAX. So what I will go ahead and do here is I would go ahead and wait a few days. Now it goes from AVAX being $5 to being $8. Now what I'll go ahead and do is throw another $500. And then now, as we're waiting a few more days, now AVAX is no longer $5, no longer $8. Now guess what price AVAX is? Now it is $15. So what I would go ahead and do, keep in mind the first two positions that I went ahead and jumped into was $500. I would now go ahead and throw a position of $1,200. And you might be like, John, wait, that makes no sense. Why would you go ahead and put in more money at a higher price? Well, like I mentioned, looking at this chart, usually this is how a lot of the crypto assets move. If you've noticed, if I was still waiting for that $5 retracement or $8 retracement, you just see the token just take off. And if you see that yellow line, it just continued to went up higher. And that's basically seeing like AVAX going from $5 all the way up to, let's call it $30. And if you would have had the mindset of like, let me wait for it to go lower, not do a dollar cost average strategy, your opportunity of being able to buy even at $15 is out of the table, because now that asset class is now worth $40 or $30, right? So for me personally, I like to go ahead and wait a few days. Even if the price goes up, I like to go ahead and scale in and get more aggressive, because that's usually that's giving you a confirmation that the market is heading in the upward direction. And even though you might be buying it at a little bit slightly of a higher price, you're actually minimizing your risk, because now you could go ahead and easily throw in $20,000, and the chance of you being wrong are slightly lower than before. Yes, you're not buying AVAX at $5 anymore. You're buying it at $15 with now 20 grand, but now your risk is a lot lower. So that's one of the biggest things I would say. Don't focus on the value number of that asset class. For me personally, I like to always focus on the percentages. I wish I was able to share my screen and show you that, but I usually always share it all the time on TradingView, how I measure percentages. I always look at, how far we are from a percentage standpoint, because I feel like percentages make things a lot easier to understand and read and visualize, as opposed to the dollar value. I think a lot of us overall as humans, we're stuck on that. And I think that goes way back from like a marketing perspective, because if you've noticed, a little bit off topic, but like when they have like big clearance deals at stores, they'll go ahead and slash like the price that says, 50% off, now $10. But in reality, that product, they're still making money off that product. You're just into the illusion thinking that you're getting a really good deal off that t-shirt. They're maybe not profiting as much, but they're still making money off of it, right? So the number thing, I think, is more of a psychological thing that we've been all dealing with as humans. So I don't blame you for looking at asset classes for the number value. And one great example, and I'm sure Tristan could go ahead and add more into this, and I'm going to pivot so I could hear his perspective on this, is, and I'm sure he talked about it prior, is the Shiba Inu narrative. Mm-hmm. How it has a lot of zeros. That's why meme coins, guys, they're so attractive to us, because we see a lot of zeros. And in our head, we're like, oh, I could own 3 million tokens of Pepe with a hat. You know what I mean? So like now you're thinking in your head, you're like, oh, I own 3 million tokens. So if it goes up to $1, now I have $3 million. And I think that's the whole entire kind of purpose with the meme coin, that a lot of people get attractive to these asset classes because of how many tokens you actually own. So I think that's kind of the perspective when it comes all down to this. I definitely want Tristan to go ahead and add a little bit more onto this as far as even with the meme coin thing, because I believe it's more of a marketing thing for the meme coins, and I'm sure Tristan could agree coming from this mindset when it comes to investing overall, right? Now, what do you think about that, Tristan? Do you think that with meme coins, people get excited because of the number of the token, like the zeros it has, or the amount of tokens they own?
Absolutely. I could rant about this for hours, but we'll keep it educational and, as you would say, productive. And just to touch a little bit on dollar cost averaging at the moment, there's a famous quote by Warren Buffett, and that is, time in the market beats timing the market. And that means just being involved, actually having your foot in the door, even if you just threw a small percentage of your portfolio in first, and then you add on as you go. That is the greater strategy that has proven to shown better results over the long run. Now back on to the, as you would say, the dollar, the psychological effect of a lower number. Absolutely, that plays a massive role in investing, even though it really shouldn't. When new people often come into investing, whether it's stocks or crypto, they will see a low dollar amount. And that can make things like penny stocks look really attractive too. They see, oh, 5 cents of this company. Um, but the number that you should really be looking at, whether it's cryptos or anything, is market cap. You can see you can always go and look at the market cap of a token on coinmarketcap.com. That is the number that you should be more interested in looking at, because if there is if there's a million tokens of SHIB, a million is actually a small number. It's actually, the SHIB tokens is probably in the billions. But the more tokens, the larger the supply of tokens there are in general. So the more tokens, then that price will be smaller. And then that doesn't necessarily mean that you will have the opportunity for it to go to $1. I've seen this with a lot of XRP guys at the moment. Not all of them. There are some good XRP people out there, but I've seen this commonly said that XRP is going to $1,000. John may have heard this one before as well. We'll even pull it up on CoinMarketCap. XRP genuinely cannot go to $1,000, at least for the next, I don't know, 10 years or so, just because the supply and the market cap of it. So there are just shy as there you go. There are just shy of 100 billion XRP tokens out there in existence. So to go to $1,000, the price of an XRP token at 1,000, I can't even do this math in my head, but that would be the market cap. So the current market cap is 126 billion for XRP. Your total market cap would be into the trillions. It would be like something ridiculous, like
I think
7
it's like
trillion.
60, or isn't it 60, or is it 6 trillion? Something
It's
crazy. It's in
something
the
crazy.
trillions.
Yeah, XRP market cap alone would have to be something in the $1 trillion.
Yeah.
And Bitcoin, like, we can show Bitcoin for a second here. Bitcoin, the market cap of Bitcoin is only 1.6 trillion, and I think the total market cap of crypto in general is only, I think it's only 6 trillion. So
Yeah, it's
XRP
about
would
6.
literally XRP would literally have to be the entire crypto market for it to reach that kind of valuation. So as you're investing, you'd want to look at the market cap number before the token number. That is the one that is a lot more important, and that is just, I guess, general advice that you should look at.
Yeah, I agree with you. One of the biggest things, that's what I personally like to do when it comes to like the lower cap tokens, is I like to focus on the market cap, because you might be looking into a token thinking that it could reach a crazy price like XRP reaching $1,000. It is not realistic from a market cap perspective. Like just the way Tristan explained it, I'm not going to retouch on it, but there's tokens like that that if you go back, like even with certain tokens, like let's just say Shiba, even for that to go to $1, I've never actually calculated it, so I can't tell you, but I'm sure that's also in the trillions. Yeah, it has over 9 zeros, so this would have to be a lot. Um, Yeah, I think it's the wrong Shiba though. It's 103,000. Yeah, it's 103,000 market cap. But still, either way, Shiba.
Oh, my bad.
Yeah, Shiba Inu. There you go. This one's at eight billion. And I think
It's
all
a
time
lot for a meme
high.
coin.
I think yeah, it's a lot for a meme coin. I think all time high last cycle it actually reached as high as 40 billion, which is pretty crazy. 40 billion market cap. So for it to go to $1, it would probably also be in the trillions, which is not possible, right? But like I said, these tokens, a lot of people have the misconception of looking at the dollar value. But if you were to look at the percentage value, even for a few of these tokens, like for example, XRP, I think XRP would easily, in my opinion, could go to $8 to $12. Very, very possible if the market continues to go up. But even if you go ahead and calculate that, that's less than a 10x return. It's lower than a 10x. So when you go ahead and look at it from that perspective, and you look at it from a percentage standpoint as opposed to a dollar value behind it, you come to realize that you're probably only going to be making no more than a 4x. And sometimes that would make a lot more sense if you look at it from that perspective as opposed to looking at it from a dollar perspective, right? Oh, XRP reaching X amount of dollars, right? For example, Bitcoin. I remember when Bitcoin was below at around the $50,000, and I think we were streaming. I can't recall. Maybe we were talking about this with our private community. A lot of people were confused and also amazed of Bitcoin being able to reach $100,000, because from a number perspective, it seems impossible but when you go ahead and calculate it based off of percentage, now you're realizing that 100,000, it could only be a 13% move, a 20% move, which in crypto is very, very doable, right? Even Bitcoin at 200,000, when it was at 100, let's say 109,000, it wasn't that far out from reaching 200,000. Like it wasn't an impossible percentage, right? From a dollar value, 200,000 sounds impressive. From a percentage standpoint, you kind of realize that it's not as impressive, meaning it's very, very doable, and it's really realistic for it to reach that. So I like looking at things on a percentage standpoint because I've noticed that that kind of gives you a better perspective of what asset classes could actually go ahead and obtain in a realistic matter, in a really realistic matter. So I highly, highly recommend all of you start looking at things in a percentage value and not so much as a value, dollar value behind it. Like Bitcoin at $83,000. If you were to go ahead and look at that from Bitcoin being at 100,000, 100,000 sounds crazy from a psychological number, but when you go ahead and measure that, the percentage is not that impossible to be reached very quickly. I mean, that's one thing I always say. The market could literally recover so quick that in the next coming weeks, as we see Bitcoin right now at $83,000, by the time we blink our eyes, Bitcoin could probably be back above over $120,000 like nothing ever happened, right? But from the dollar perspective, it looks impossible, but from a percentage standpoint, it's really, really realistic. So I recommend all of you look at things as a percentage standpoint. Um, and also that I think that helps you a lot, especially also, this is also another thing too. Like when you're shopping, right? When you see 20% off, 30% off, it looks really impressive. But when you calculate it, you come to realize it's sometimes only an $8 difference, which sometimes
Yeah.
with a product that's worth, thousands of dollars or hundreds of dollars, an $8 difference is not too impressive. But from a 30%, 25% sounds impressive, right? So I don't know. I think it's all about perspective, the way you guys view things. But I think percentages and market caps when it comes to these tokens could definitely go ahead and give you a better perspective overall on what tokens could actually achieve. Shiba can't achieve $1 right now. Impossible. XRP reaching $1,000 at this cycle, impossible.
Yeah. No, it's not quite going to happen. And it's important to look at the supply. So the supply of Bitcoin will only ever be 21 million. There will never be more Bitcoin than that. That is it. 21 million, that is it. You're done. No more. Whereas with things like XRP, the supply was, slightly below 100 billion. So the smaller the amount of supply, often back to, general economics, uh, lower the supply, higher the demand, higher the supply, lower the demand. So that's kind of why you see Bitcoin is worth $83,000, and then XRP is worth 2 billion. So sorry, that's why XRP is worth $2. If XRP had a supply that was similar to Bitcoin, if XRP there was only 21 million tokens, you would see XRP substantially higher. But it's just the fact that it has, that 100 billion tokens. It means you're going to have a much lower all in all token price. Yeah, is there anything else you want? There was one other thing I wanted to cover today, and that is, Jon, what are you expecting in ETH Denver?
That's a great question, man. I'm really expecting to go ahead and connect with as many teams, crypto teams, and get to go ahead and learn as much as possible. That's really what I'm here for. So I'm expecting to go ahead and meet a lot of new people, network, and hopefully provide more value to all of you. So that's really what my goal is here at ETH Denver. But yeah, man, I'm very, very excited. I came in officially yesterday, last night. I went to two events yesterday. I went to a Say event, which was pretty cool. I met some of the team members there from their marketing team. I got to spend some time with them. So it's really cool that we talk about these projects, and now I'm going to this event where you could actually meet up with the teams, right? So highly recommend all of you, whenever you guys get the chance in the future, try to join these events, because that would definitely go ahead and also help you out, because now not only are you with like-minded people, but now you can actually also get information about the projects that you're invested in, right? So yeah, so far that's what I went to that, and then I went to this event with Barachain too as well. Unfortunately, I got there a little too late, so I didn't get to meet the founders of the team. But yeah, there's a lot of big events, so hopefully I could go ahead and come across other teams. The one I'm really looking forward to is the SUI and the base. So I can't recall what day that is, but those are the two main events I really want to go to, and hopefully I could go ahead and come out with a lot of value.
Some valuable information for all our members. That would be very appreciated. Have you heard, is Vitalik supposed to be there?
Not that I know of, man. I don't think so. I haven't heard. Because the thing is with this event is that there's like main events. There's like a main event that's kind of like a trade show where there's a lot of companies. They're pitching their product, their service, and then you have speakers that could be talking about like regulation with crypto, things like that. And then you have side events, and these side events consist of like team members. So it could be like you could be snowboarding with the SUI team, so you could be doing a normal activity with the founders of the group, or let's say team members, marketing team, or whatever the case is, and you're like doing an actual real activity and building that actual real relationship, right? It's not like just like, you're at an event sitting down listening to them speak. There is a few of those, but there is also side events where these teams went ahead and launch in order for people to go ahead and come in and connect with the team members of that company, which is really nice. So it's like, for example, I signed up for a few events. Unfortunately, I didn't, because I came in a little too late yesterday. I flew in at like 4 a.m. So I didn't want to wake up early this morning, and I had a few calls to take care of. But for example, there was I think it was probably like a venture capital or another blockchain team, but they had like a run where you were able to go ahead and meet them for a run. They'll go ahead and run, and then after the run, talk crypto, have a coffee or things like that. So it's really neat. I've never seen this. My first time being at one of these events, and I really like the unique approach that they're taking. And you actually get
Wow.
to spend that time with the teams too as well, which is really really cool.
That would be cool. I would definitely be down to shred somehow with Vitalik out there in Aspen. That would be so cool. Uh, yeah, but we're really looking forward to some great alpha coming out of this event.
No, yeah, 100%, man. And hopefully next time you can meet up at one of these events.
I'd be so down. I don't think anything happens really. I think we have some events in Toronto up here in
Yeah,
Canada,
you
but yeah,
guys do. You guys have the Bitcoin event, I believe.
yeah, something happens out there in the East Coast. But yeah, maybe next time. Maybe next time. And of course, I'd rather go to Aspen. Honestly, Toronto's boring. I think that's all for the pod today, John. Is there anything else you want to cover before I take us out?
That's pretty much it. I mean, right now it's just the waiting game. Unfortunately, I would really wish I was able to go ahead and tell you exactly where the market's going to be heading. I was looking at the market right now earlier as you were speaking. There was really nothing that I found out the norm that kind of got brought up to my attention. Now there is one thing, and that's the DXY. The DXY is actually showing strength, which is not good, and this is probably why we're seeing the market like this, having this continuation of a shakeout. So I'm not liking what I'm seeing in the DXY. The stock market is still at his the US 100. The Nasdaq is still at a support, so nothing too crazy there. But the DXY is definitely, which the DXY stands for the dollar index. It's an inverse correlation to what happens to the market. So if the dollar goes up in value, usually Bitcoin, crypto, the stock market goes down. And when the dollar goes down, the market goes up. Usually it's correlated 1-to-1. It hasn't been like that these last couple months. But today the dollar did go up and the market's down. And it's showing a little bit of strength. I'm hoping it doesn't pick up in strength because that would mean that there would be a continuation of more downside. But so far, that's the only thing. But like I said, anything could happen tomorrow. We could wake up, dollar gets rejected, and then the market starts to pick up once again, right? So I do not want to make any assumptions based off of that. But the only thing that has kind of alerted me a bit was the dollar index, the DXY. But besides it, that's all. There's really not much. I would say let's see how tomorrow ends. Usually, what I like to go ahead and say, and I've noticed, is that usually when the stock market ends on a red on a Friday, typically that would mean that we could be expecting a red week coming ahead for crypto as well. So tomorrow, keep that in mind. As soon as the US stock market closes, if we are in the green, that could ultimately possibly mean that the bottom is in. If we end in a red, that could possibly mean we could be expecting more red leading onto the weekend. Or what I've also noticed, it's really interesting. Well, what I've also noticed is that usually if there's any kind of major event that's supposed to happen, it usually happens over the weekend, and Wall Street usually sells off before if they're in doubt, or there's probably going to be a big announcement being said over the weekend, right? So we'll see how things go tomorrow. So keep your eyes on the stock market tomorrow on how it closes, and that should give us a little bit more information on what we could be expecting in the next week. But yeah, that's pretty much it on my end.
Yeah. We might be up on that dollar index just because of all this tariff talk that is happening.
Yeah, what's going on? Is it more tariffs now being talked about?
Oh yeah. So we got more tariffs coming on March 3rd, maybe I don't remember. It was either 3rd or 4th. New tariffs for Canada, Mexico, and China again. And then we also heard today that we'd have tariffs on the EU coming up as well. So probably
Wow,
the dollar would be up on all that tariff talk.
that makes sense. Don't we also have the FOMC meeting on March?
Yes, we do. Sometime in March, we do have the FOMC meeting again as well.
Is that like towards? I think it might be like towards the 18th or so, right? I can't recall the day.
Yeah. It's usually middle of the month. March 19th to 20th here.
Okay, so March 19th is going to be the FOMC meeting, the Fed meeting. So who knows? Maybe we could have the FOMC meeting go really well and the market reverses. So basically, I don't really expect much. I expect a lot of volatility leading into the event, in my opinion.
It will be a busy March, unfortunately, I think.
Yeah.
Yeah. Well, you guys know where to come to see all the new news in the crypto market. Thanks for tuning in this week. I hope you're walking away with some clear strategies and insights to push your DeFi journey forward. Remember, DeFi is evolving fast, and staying ahead means taking action with the right knowledge. If you're ready to dive even deeper and want to build a roadmap for your own DeFi success, check out our DeFi Masterclass. The link is in the description below. In the training, you'll receive clear hands-on strategies to maximize your returns, manage risk, and truly make the most of what DeFi has to offer from our CEO, Tan. Make sure to like and subscribe and hit the notification bell so you don't miss out next week's live episodes. Until then, keep learning, keep growing, and I will see you right here next time on Decentralized Masters. Good luck in ETH Denver, John. See you, everybody.
Take care, guys. Bye.